In this video, I want to go through 8 companies that potentially could increase their dividends in July. Dividends is a major foundation of my goal to generate passive income. So you may have noticed that this channel is all about the dividends. And I continuously invest in dividend stocks to grow that passive income source. But as we've seen the last couple of months, a major problem is inflation. So without growth to our dividends, then our income source actually is losing purchase power. So that is why one of the things I'm most interested in when I'm looking at a stock is actually their dividend growth rate. The market was quite volatile here in June. It stabilized a little bit, but it seems it's back to being volatile again. Earning guidances are being updated as the impact of all these market headwinds are taking shape. So a strong dividend growth is not something that is guaranteed anymore to be in the cards. In June, we saw some really strong increases though, such as Target with 20% and FedEx with a very staggering 53% increase to the dividend, which is just massive. So let's take a look at some stocks that could potentially have their dividends increased here in July. So without further ado, let's get right into it. So the first company is Cintas Corporation, stock ticker CTAS, and year to date they are down around 12.5%. And they provide corporate identity uniforms and related business services. So you can rent a uniform through them, you can have them service the uniforms on other garment, and you can provide restroom cleaning services and supplies, as well as also selling uniforms. It trades at a forward PE ratio right now of 32%, and compared to the 5-year average, it's just a bit over that 3%. The dividend stats are looking quite okay. The dividend yield is on the low side. It has a 1.02% yield. The payout ratio is really healthy at 32%, and the 5-year CAGR is 33%. It says dividend grows at 0 years, but prior to this, they did pay out dividend for 38 consecutive years. So I think it's definitely something they are looking to get back growing. Next up is Cummins, stock ticker CMI. And year to date, they are down 11.5%, but trades at a forward PE ratio of 11. And that compared to the 5-year average is roughly 23% below. And you probably might know them. They have well-known diesel engines and other natural gas engines and some different power trains. And looking at the dividend stats, they have a dividend yield of 2.96%, healthy payout ratio at 39%, 5-year CAGR is just over 7%, and a dividend growth rate for the last 3 years. So probably also something that could increase the dividend. Next company is Hershey Company, stock ticker HSY, and year to date they are up 13.5% roughly and trade at a forward PE ratio of 27. And if we compare that to the 5-year average, it's pretty expensive right now. It's around 17% higher than the 5-year average. And of course, Hershey is well known for the manufacturing and selling of confectionery products and pantry items. And if you're looking at the dividend stats, they are also looking really good. Dividend yield of 1.65, payout ratio very healthy at 45%, 5-year CAGR at just below 8%, and a dividend growth for 13 years. So probably also a good candidate to grow the dividend in July. Next up is JM Smucker Company, stock ticker SJM, which year to date is down 4.3%, and it trades at a forward PE ratio of 15.7, which is 12% above the 5-year average, but still it's potentially a pretty good place for it to be in. And if you don't know them, they are manufacturing and marketing branded food and beverage products, and they do it worldwide. And if we look at the dividend stats, they're looking really good. The dividend yield is at 3.11, payout ratio around 45%, and the 5-year CAGR 5.7%, really good. And the dividend growth rate has been growing for the last consecutive 19 years. The next company we're going to take a closer look at is Norfolk Southern Corporation, that engages in rail transportation of raw material, intermediate products, and finished goods in the United States. Year to date, they are down 22% and trades at a forward PE ratio of 16.3. And compared to their 5-year average, that is 18% below actually. So probably a pretty okay deal here right now. If we look at the dividend stats, they have a dividend yield of 2.19 and a payout ratio of 35%, which is really good.
5-year CAGR is looking really excellent at just over 14%, and they have been growing the dividend for 20 years. Also a pretty good candidate, I would say. Next up is Scott's Miracle Gro, and they engage in the manufacturing, marketing, and sale of products for lawn, garden care, and indoor and hydroponic gardening in the United States and also worldwide. Year to date, they are down 51% almost and trade at a forward PE ratio of 16.5. And if we compare that to the 5-year average, then it's 20% below right now. If you believe the growth story, there could potentially be something here because the dividend stats are looking excellent. It's 3.24 dividend yield. It has a payout ratio of 35.5% and a 5-year CAGR of 5.71. It has been growing the dividends for 12 consecutive years. Next up, we have Stanley Black & Decker, and as the well-known tools manufacturer, and they also engage in storage and industrial businesses in the United States. And they are year to date down 43%, trades at a forward PE ratio of just below 11. And if you compare that to the 5-year average, it's 38% below. If we take a look at the dividend stats, they are looking really, really good. I would say it's a company I'm personally invested in, and they have a dividend yield of 2.94%, payout ratio just above 30%, and a 5-year CAGR of 6.38%. And it's a dividend king, so that means they have been growing the dividend for more than 50 consecutive years. And in reality, it's 54 years. So extremely strong stock here, I'd say. And the last one I'm going to take a look at is Walgreens Boots Alliance, the pharmacy-led health and beauty retail company. And year to date, they are down 23% at the time of recording and trades at a forward PE ratio of 8. And if we take a look at the 5-year average, it's normally sits around 10. So it's 20% undervalued right now compared to the last 5 years. And if we take a look at the dividend stats, they are looking really, really good. The dividend yield is 4.66%, the payout ratio is 32%, and the 5-year CAGR is just below 5%. I would like that to be just a bit more, but it is what it is. Dividend growth has been going for 7 consecutive years. So definitely also a strong candidate to increase the dividend in July.
So a fantastic list of 8 companies that potentially could increase their dividends in July. Let me know down in the comments if you own any of these companies, or maybe you are looking into them. Then let me know your thoughts. I'd love to read it. And if you've come so far, please consider subscribing to the channel for more videos in the future. It helps me out a ton. And thank you ever so much for watching once again. And I'll be seeing you in the next video.